So let's move on to our next session, that is UPI, India's flagship digital rail, conception, global integration, and sustainable monetization. UPI turned a retail payment rail into a national reflex and is now being watched well beyond India's borders. This session asks whether its zero MDR model can survive its own success and what it will take to make UPI the rail for the rest of the world. To moderate, I would request Mr. Sanjeev Ahluwalia to be on the stage again. Joining the panel, we have Dr. Balakrishnan Mahadevan. Sir, we request your presence on the stage. Former Chief Operating Officer, NPCI, Ms. Monica Jasuja, Chief Expansion and Innovation Officer, Emerging Payments Association, India, Mr. Kiran Shetty, Managing Director, SWIFT, India, Mr. Ashok Lavasa, former Finance Secretary and former Election Commissioner of India. We are starting with the second session soon, so I request all our guests to be settled down. To moderate this session, we have Mr. Sanjeev Ahluwalia, Distinguished Fellow, CRF, and Mr. Vivan Sharan. Partner at Koan Advisory Group.
Can we settle down, please? The session is about to begin. Would I request anybody in the room to sit down? If they have to go to the washroom, it's to the left or the right. But anybody in the room, please sit down. Thank you. We're short of time, so we're moving into the second session. Ishita?
Yes.
Should we start?
Just a minute, sir. Just a minute.
Huh?
Just a minute.
Start? Just a minute.
Yes. Okay. May I request the audience to settle soon? Okay. On to our panelists and moderators. Thank you, sir.
Start. Okay. So, welcome for the second session. This is another very interesting session and a fantastic lineup of speakers.
Speak to the mic, huh? We can't even hear you.
They can't hear me? Now? Can you? Why didn't you tell me that you can't hear me? Anybody who can hear me, raise your hands. Hey, okay, yeah. Balu, you're wrong, man. They can all hear me. Okay. So, so we have a fantastic panel of 4 speakers, and you have the fantastic luck of having 2 moderators, not 1. We have Vivan Sharan. Vivan is a founder. He has a advisory company, and which we are partnering with regularly. You can see the logo right there on the top, Koan Advisory. And our other partner for this particular session is, of course, Ikigai, and I can see Rutuja over there. So we're now going to commence the session, and I'll start moderating. I'll moderate 2 people, Balu and Monica, and Vivan will then take over the burden and moderate Kiran, and we reserve our most takda khiladi for the end. That is Mr. Ashok Lavasa, former Finance Secretary, Government of India. Before that, he was Secretary, Environmental Affairs. Sorry? Can you please sit down? Thank you. Before that, he was Environmental Secretary. After retiring as Finance Secretary, he was one of the election commissioners. Thereafter, he has been Vice President of the ADB. So that is coming from me. It will also come from Vivan, because Vivan is moderating him. But I thought we cannot ignore the elephant in the room. So I thought I'd just mention his credentials. So thank you for recognizing that. Thank you very much. So let's begin. Balu, now, you are my mentor. You are my mentor on fintech. So I have a couple of questions for you, not too many. To start off, I know that your answers will be very brief. So I can afford to be long on the questions, right? That's the pact between you and me. Now, UPI was operationalized a decade ago, right? A decade ago. Decade is a lifetime in fintech. And it's supposed to be still best in class. But are any modifications necessary to mitigate several pathologies that we have seen despite UPI, which is, digital risks, identity theft, scams, frauds, and now, of course, the threat of agentic AI. What's your view?
Thank you for having me here. Can you hear me?
Balu, if you want, speak from there. If
No,
you're
I'm okay.
Whatever.
Thank you for having me here. UPI is probably one of the best product India has produced, no doubt about it. It's globally known. I worked with World Bank, traveled to many countries. The first question they ask is, can we replicate UPI? I think there are two products from India which is globally known. One is Aadhaar, second is UPI. No questions about it. I think one of the best product. I think we must appreciate the people who work behind this. Absolutely. I think the last decade was more about interoperability and scale. I think we have achieved both of them significantly. I think Tamal talked about 600 odd banks, part of it, right? 22 billion transactions a month, right? Those have been achieved. The next decade is more about resilience. I think we did hear that UPI did fail a couple of times last year, right? And unfortunately, fortunately, UPI does 90% of your digital payment transactions. Therefore, there is the risk of resiliency. Definitely that has to be addressed. That change has to definitely come about. The second change has to come about is the fraud. Yesterday, I think in today's newspaper I read, fraud is offered as a service, fraud as a service, FAS is coming into the picture, right? So that's an issue. I think with the advent of AI, we have far more capabilities to detect frauds and then fix them much before it actually impacts the consumer, right? So I think the next decade is going to be resiliency, fraud detection, AI agents, and those are the areas where we need to work on this. UPI has already become a platform. I think in India, you can now walk without your card and you can still do most of the transactions, right? So that's never in question, right? But the resiliency has to be addressed. You can't have UPI failure, right? So there are risks, concentration risks on multiple fronts. One, NPCI itself is a concentration risk as an organization. They are not a regulator. They are only another Companies Act, Section 8 company, or whatever you want to call it. So NPCI itself is a concentration risk. And within NPCI, UPI is a concentration risk. And it is not that people are not aware of this. So I think RBI is aware of the concentration of NPCI. They have wanted to come out with an EU licensing policy. Applications are called, but licenses are not issued. So that need to be addressed, right? Within NPCI, the UPI, two large third-party players account for more than 80% of the transactions. Right? What happens, if one of them is not able to work, or geopolitical reasons, they're not able to operate in India? What happens to that? I think NPCI itself knew about it. They wanted to put the 30% cap on this, but that has not been actionable for the last so many years, right? They keep extending the last date. I think those issues have to be addressed. We have done very well, but that's also a time to reflect, what are the things we have to improve? What are the things we need to make sure that our economy doesn't suffer because something goes wrong, right? As per World Bank policy or general, there is something called the Principles for Financial Market Infrastructure, which govern the payment system development. And they clearly say a country should look at optimally developing, socially optimal mix of payment instruments. But unfortunately, in India's case, 90% of the transaction happens on one platform, one product, which is a huge risk. That need to be addressed. That's very, very important. Toward that direction, any change which can happen, it'll be wonderful. The using of AI, reducing the fraud, making sure that there is a much more, broader development of other payment instruments, which is very good. Unfortunately, fortunately, we have not seen any new payment instrument coming after UPI in 2016, right? That's the last time we saw a new instrument, right? Between 2010 and 2016, a lot of new instruments came about, starting from IMPS in 2010, RuPay cards, Aadhaar payment bridge, AAPS, NFS expansion. So many things came between 2000 and 2016. But after 2016, we have not seen any new instrument. All we hear is UPI 1, UPI 2, UPI 3, UPI 4. But that has to change as well. I'll leave it at that.
Jeevji, can I interject and ask one follow-up question, which I think is a natural corollary to what he said. because he's brought up resilience at the first stroke. So, the new umbrella entity construct, sir, what happened to that? Why was the baby thrown out with the bathwater? And why is there no path now for other consortia to come together and explore an alternative payments infrastructure?
So I think that's a question that should ideally be answered by RBI, right? The rationale for coming out with NEU is not dead, it's still valid. Because 90% of the transaction happens on one platform, then concentration risk is real, right? What RBI said, when they rejected this, apparently what they said is none of this payment, new umbrella entity, who are applied, they did not come with a new product or service which is innovative. I think that apparently is the reason given. I don't know if it's the real reason. But that's not the purpose of calling for NEE. Because if you come out with something completely new, that doesn't address your concentration risk. If you come with a product completely new, that doesn't address your UPI risk because it will take years to scale to that level. Right? So therefore, in one of the discussions, I suggested that there should be NUE licensed. Right? I mean, to give you an example, right? There are only about 10 crore customers who take credit in India, right? Conceptually, right? But there are 4 credit bureaus. Every institution who is providing credit is forced to give the data to all the 4 credit rating companies. You don't have a problem with that. But 400, 500 million people use UPI, but you don't have an alternate. Right? So therefore, ideally, I mean, in my humble view, right, RBI should have licensed 2 or 3 NUEs, and they should have said, 3-4 payment products should be common to all of them, right? It could be UPI, it could be IMPS, whatever you decide. I mean, that's RBI's decision. You make sure that these 4 products, which is what the consumers will use, they should have same messaging standards, same communication protocol standards, right? And most of the banks should be forced to connect. You could take a decision that banks more than X million customers should definitely be part of all the 4 payment product companies. But the decision to route the transaction can be left on commercial considerations, right? With a clear understanding that if one system fails, there should be sufficient provision to automatically do the transaction to the next available network. So assuming you had, for examexample, 3 NPCIs, NPCI 1, NPCI 2, NPCI 3, they offer exactly 4 same products, right? Banks are connected to all the 4 ecosystem, right? So you could choose based on your commercial decision where to route the transaction. And that system was already available even earlier. When you do ATM transaction, point of sale transaction, you could decide which is most favorable to you. You can route it to them. So the commercial decision should be left to the organizations to decide based on what is good for them. But there has to be a backup. I mean, that's what I would
Thank
feel.
you, sir. Apologies, Sanjeevji. Back to you.
Okay.
It was much too
Balu.
tempting to ask.
Sorry?
Ask on the sides.
Balu, I hope you don't mind me calling you Balu. His real name is Balakrishnan Mahadevan, but he's affectionately known as Balu. And I must also tell you that Balu has written a wonderful book which has been profiled outside. All of you may have seen it. Some of you may have. If anybody wants a copy, Balu has generously offered to donate 4 or 5 copies to not the highest bidders, but the ones that he assesses will use the book and read the book. So, so please contact him. There are some copies outside, but they're only available if Balu certifies you. What's going on here? Yeah, my God. No, but if somebody else did, even then I'm worried. Okay. So, Balu, I know that you're a...
I just need to answer one question that Ivan asked. Can I please just give one line and say something?
Sure, one line is no problem.
One line is all that's allowed.
Not at all.
Switch this on. So Ivan, I can say this now in my current position as not the ex-CIO of NPCI, but as just a general public person. Market forces haven't been allowed to operate, and that's a given in our market, and that's something that the card networks and others have actually got no equal playing field. And having said that, it's very hard to say this outside of the premises of what we're speaking about, but if market forces won't play, then competition will not be allowed to operate in a free economy like we are today, because we don't allow operational excellence to actually be something that consumers choose. And we are forcing down things on them, and because of zero MDR. And that's a whole new topic, but I'm sure Sanjeevji will cover that.
Okay. Well, I was kind of coming to Balu on this one. Balu,
I can't hear you at all. I think, yeah.
you can't hear me at all. I'm eating the mic, yeah. Which, what kind of a mic is this? It's amazing, like an ice cream. Okay, so Balu, I know that you are a big votary of the public sector. Digital public infrastructure must be, as far as I understand from you, best done publicly, which is what NPCI broadly is. But, can I venture to say that you were lucky that you were in DPCI? There is any number of public enterprises in India which are nowhere near the efficiency scale. So what were the peculiar circumstances within NPCI that made it different? And are there lessons that we can then draw for using in the public sector wherever DPI needs to be rolled out? What would those lessons be? I say that because Balu here was the Chief Operating Officer of the NPCI, and he worked directly under Mr. Narayan Murthy. So that was a sort of I wouldn't call it a glorious period in the history of NPCI, but certainly a very productive one. Balu.
Thank you. A couple of minutes I'll explain, I worked in the private sector I started in government, I realized I'm not fit for government, I moved to the private sector, I worked for multinational banks, right? And then I moved back to NPCI. Right? I also had this doubt, whether a public sector enterprise can create, infrastructure of this scale, right? I had this doubt. Then I realized, if you have visionary leaders like Narendra Murthy sir, anybody of that stature, right, can make things happen. Right? And NPC is a classic example. You talked about efficiency. So let me give you one number which will tell you the efficiency of NPCI. In the year 25, March ending year 25, NPCI did 2,300 crore transactions. Pretty large number, right? And they spend only 10 paise per transaction. You can look at their balance sheet. If you look at their expenses, right? The operating expenses was only 10 paise per transaction. Of the 10 paise, 5 paise went for marketing expenses, which effectively means they're able to do your UPI kind of transactions, all transactions put together at 5 paise per transaction. Isn't that efficiency for you? Nowhere in the world this kind of efficiency has been seen. Right? To give you a context, US recently implemented FedNow 3 years ago. They spent over $500 million to implement that. We didn't spend even 5% of that. Right? So therefore, it is possible to do efficiency in all sectors, right? Nothing to do with whether it's a private sector or public sector. It all depends on the leadership of that organization. And NPCI was fortunate to have great leadership in the initial periods of time, including Narendra Murthy sir. And if you look at it, even Aadhaar, if you look at it, the leadership made a big difference, Nandan Nilekani. Right? So to my mind, if you build institutions with great leadership, people with strategic vision, things can happen, even in a country like India. No doubt about it, right? So the problem with public sector is not about, whether they can be efficient or not efficient. It's about leadership. If you allow good leadership to flourish, things will happen. So that's a lesson I have, and that's what I see across the world, right? Every organization you see success, you would definitely some great leaders, leading that organization. I think that's the key. Everything can be bought in today's world. You can buy technology, everything, but leadership, strategic vision, integrity, these things cannot be bought. Right, I think that's the lesson I learned, sir. Thank you.
Okay, Balu, last question for you. So, UPI is being explored for export currently. 2 questions. Should it be exported? Number 2, can it be exported? And if so, what are the minimum conditions under which export will be possible?
Very good question. So when you talk about UPI globalization, I don't call it an export. I talk about UPI globalization. There are 2 contexts, right? The first is a must. So for example, if you have a MasterCard card accepted across the globe, right? So that is not exporting UPI. That is making sure that UPI is accessible across the globe. I think we have made some beginning, 8-9 countries, we do see UPI, but we don't get to see the numbers at all. So my belief is if the numbers are not being said, the numbers are not good. right? Otherwise, you will hear 22 billion transactions next of the month, first day of the month I get to know, but I don't know anything about what is happening. But if UPI has to really become global for Indians to benefit, I think it should become accessible across the world, like not 8 countries. And within the 8 countries, not specific places like Eiffel Tower alone. It has to be accepted across the country. Then only, now I would say we have made some inroads onto that. So that's about making it acceptable to, as an acceptance infrastructure, like a MasterCard, a Visa card, or a Diners card, whatever, China Union Pay, whatever. And I see China Union Pay accepted even in Africa. Right? So they have spent enormous amount of money to make sure that that payment instrument is acceptable, an acceptance infrastructure. So that's one aspect of it, right? The second aspect of it is, can you give this solution to other countries? That's even today debatable. NPCI is not created as a software company. It's created as a payment company, right? The benefit of digital public infrastructure, Tamal talked about it. I'm sure Ashok sir will talk about it, right? It's very, very clear. In a developing world, right, creating digital public infrastructure is extremely important. While UPI per se, as it is, may not be exportable, I think the concepts behind that, the interoperability, the resilience, the DPI construct, right? All of them are extremely important, right? And would it succeed in all the countries? There also I see a significant difference between how the digital payments like UPI is used in a developed country versus a developing country, right? As you may know, the faster payment came in UK in 2008. I mean, India's IMPS is a precursor to that, right? Precursor to IMPS is faster payment in UK in 2008. They've been running for almost 20 years now, but that doesn't contribute even to 10% of the total digital transactions in the UK. Right? That's a developed country. If you take any developed country, US spend millions, 500 millions to do that. They don't even have a few billion transactions in a year. Right? So developed countries are not replacing their card rails. Whether you like it or not, that's a reality. Developed countries are not replacing card rails. Right? It is the developing countries which is leapfrogging, like Tamal sir said, leapfrogging into the digital payments. If you look at examples of India, which is UPI, you look at the examples of Brazil, PIX, these are the 2 fastest growing, faster payments in the world. They are replacing, right? So it depends on which country you wanted to go back and sell this to. That's important, right? Then, as I wrote in the paper, right, when somebody conceptualized UPI in 2016, as Tamal sir also said, nobody expected this kind of a success, right? If they had expected this kind of a success in 2013, we wouldn't have created RuPay with 900 million cards issued to all of them, right? UPI succeeded because of many other factors. Right? Not every country you're trying to export this have those factors already built in, like your PMJDY, your DBTs, right? Your low cost of mobile phones, mobile penetration, government. There are hundreds of factors which made UPI responsible to the success. Right? Do others countries have similar kind of environment to UPI to succeed? I don't know. That's something you need to evaluate. Right? The second thing you should evaluate, payment products are not predominantly government driven. A UID, a digital ID product can be easily implemented because the government implements it, you mandate it, things will happen. Right? So the ability of Aadhaar being taken to other countries is far higher. And that's exactly what the experience is showing to us. Right? There is a company, there is an organization called MOSIP in Bangalore, run out of IIIT Bangalore. They've been able to do some part of the Aadhaar digital identity solution to some 20 odd countries. I don't know UPI has gone to 20 odd countries as a software solution. It does not happen. Because there are existing players, there are existing environments, there are existing institutions, right? So you need to take them along together. Nobody is going to replace the existing card rails with UPI unless there is a significant benefit to be shown to the respective countries. So the idea is good, but we need to be clear in terms of, do you want to export UPI as a product, or you wanted to export the concept behind this, so the whole economy of that particular country we are trying to sell will benefit? I think that's a question you should answer, right? The chances of taking UPI as a product, I'm not too sure about it. But if you take the principles behind that and help those countries to grow, I think that'll give us far more soft power than taking a software solution to a particular country.
Thank you, Balu. So we move on to Monica Jasuja. Monica, 2 questions for you. One you already answered earlier, so that'll be 3. 2 questions for you. The first one is that, taking on from where Balu left off, so if UPI is to be exported in some form or the other, the question that arises is that, what is the likelihood of standardization across the entire value chain, as it were, wherever UPI intends to go? What would be the processes that need to be adopted for a common sort of standard to emerge for UPI to cross the borders and be somewhere else? Any thoughts on that?
Actually, let me take a leaf from what Balu said and then actually answer your question. But I'm sitting right next to SWIFT. So they are the standard of standards and how standards are actually set in payments.
I thought he might be also interested in that question.
So I'm sure
I had
he's...
an inkling.
Absolutely. But I think the question about whether UPI is exportable is possibly a little misguided, because keeping the nationalist interest aside, I think it's important to understand that the global world operates in different silos, and it's allowed to operate that because they have been much more advanced. So I'm sure everybody here has traveled post-COVID. It's not possible to look for a QR code in places where there is contactless technology, and rightfully for the right reasons. So SWIFT can generate and help a transaction go in 37 seconds, as it happened as of today, from Australia to India because of SWIFT rails. But if you were to ask me whether a UPI kind of transaction will work in Australia, the answer is absolutely no. Nobody is going to accept it. Nobody wants a taxi driver to tick out that QR code. It just doesn't work. So I think that particular question itself just leads me to a response. Right now, what UPI is doing is creating bilateral linkages. And bilateral linkages and interoperability, and again, this is something we debate the whole day round, like this is our bread and butter of how payments operate as an instrument. Interoperability can be achieved with interoperable rails. So I think the bigger question to ask is how much infrastructure do we not continue to keep building? If UPI is an infrastructure, then that infrastructure should be exportable, and it should be allowed for private and public operators to operate on top of it, so that we have interoperable structures. So for example, if somebody is trying to pay with a card, it should be possible. I think that's the more important thing. I love the fact that we want an India-based product to go abroad, all of us do, being Indians, but we have to understand that the nuances, if it was so simple, then it would have been done. But there are enough technology providers, including ISO standard organizations, which are actually trying to create the standards for three kind of things. And this is something we've talked about in a brief bit. But look at digital identity. What India has done with Aadhaar has become the playbook of how digital identity should be handled from not just generation, but usage. And I think that's great. So how, now the question becomes, and we briefly spoke about it in terms of identity passportization, which is the fact that if I am a Aadhaar verified user in India, because RBI believes that Monica is Monica, this particular verification should hold for my Singapore payment as well, because DBS in Singapore believes that Monica is who she says she is based on RBI verifying her. And I think that passportization is critical, because when payments travel, they require data to be transferred, and they require data to be validated. All of that is not going to be possible with a technology type. It's going to be possible with a technology platform. And I think we should take pride in the fact, and thank you, Balu, for saying it, there are so many countries which have done so many things. Whenever you go outside, you become the natural ambassador for just UPI. Right from a taxi driver to somebody, they all know only two things. One is UPI and one is Mr. Modi. There is nothing in between. There is no, you don't need to introduce somebody as an Indian. You don't need to tell them where you're coming from. All they're speaking about is these two things. Like, my world has transformed because of UPI.
Somewhere Amitabh Bachchan is very offended by what you say.
Shah Rukh Khan in Indonesia is also, but that's the fact of the matter. But I'm just going to close with this one thing, that I work on global payments and policy. There is enough data to suggest that I won't call it UPI, but NPCI, and the groundbreaking work that they've done here is forming the basis of global standards, starting with fraud detection, cybersecurity, and resilience. What India has done, nobody has done. But the risks that Balu has provided, these are very, very specific, and we cannot be at the point where payments is a national critical infrastructure. We need more participants, global and others, in the ecosystem, and we need equitability in terms of both access as well as innovation.
Monica, you told me that you've been working on the importance of capital use in determining what is the cost to the customer. Tell us about your research, because it's new, unless it's under wraps.
It is, but only for 2 weeks. So
okay, so just give us a hint. What have you found?
So, in terms of cross-border payments, I sit on one of the G20 task forces, and it was very clear that G20 hasn't been able to meet its goals, and we all know. And then there was a SWIFT report that was actually presented, which talked about how payments can travel within, I think, 80% in less than 75 minutes, right? And then the last leg is the one that causes most of the problems. So we actually looked at a lot of the corridors in APAC and identified what are the major costs of cross-border payments and how do you reduce them. And one of the major costs happens to be liquidity. Because I was giving a very small example. If I'm supposed to send you money, like there is a bank or a set of banks and institutions in the middle who know that Monica will send maybe upwards of $100 per week to a person outside. And based on that, they're able to determine how much liquidity they need to have. Now imagine if this particular cost of liquidity can come down and the spills are passed on directly to a consumer or a business. So for example, if I am a one-person business in India, which I am, I have to accept payments with so many amounts of compliance and data and actual paperwork. But if these costs can be passed on to me, this savings, because there is somebody in the middle who believes that Monica will get paid, say, $10,000 on a weekly basis, then based on that estimate, they bring the cost down, and that's where a lot of AI comes in. And what we identified was that these particular costs are associated with banks not keeping pace with technology, not providers, not rails. Another very important thing was about how we actually manage FX. And a lot of us, given the volatility and the whole war-like situation that we are facing, have faced a lot of, and we keep asking the questions about INR, but trust me, there is enough to say that a lot of illiquid currencies have the same problem. If there was an FX marketplace that, for example, a lot of our countries actually created, then there would be finance organizations who maintain this cost of capital and are able to manage liquidity to get the best FX rate. So for example, when the FX rate is great, we buy in bulk and then pass on this to smaller merchants, smaller consumers. Now this is really critical. So these are some of the recommendations of the toolkit and more that are going to be released actually in partnership with SWIFT in one of our meetings that is coming up on 16th of July in Kuala Lumpur. And we hope that this will be a standard for the industry to look at how we can bring down costs on the basis of actual collaboration.
I just wanted to add
Vivan.
one more thing.
Okay.
We did study the remittances cost in the sub-Saharan Africa is the highest, right? The reason for that is exactly what Monica said. Liquidity cost is important, FX is important. But one more thing we figured out based on the discussion, right? What is the kind of infrastructure they have in the receiving country also makes a huge difference. India has a very low remittances cost from many countries because to reach anybody in India is so easy now with 85% of the adults having a bank account. Financial inclusion has significantly helped India, right? So while you must address for cross-border remittances, the liquidity challenges, the FX challenges and all that, it is also important to address the financial inclusion challenge in the receiving countries. Right? I mean, today, to move money to an account and bank account is easy because you are EKYC or KYC or RBI regulated entities, so moving money is easier. Many of these compliance-related aspects gets taken care if you have a proper bank account, which is not the case in many of the sub-Saharan Africa. I think those are the three reasons why cross-border costs continues to be high. To give you an example, way back in 2000, I implemented a product called Citibank Global Transfers, right? You could move money cross-border seamlessly without anybody touching the transactions under 30 seconds, meeting many of the SDG goals subsequently set up, like transparency, less than 3% cost, immediate. All of that was possible using technology 25 years ago, right? So technology is not the challenge. There are so many other challenges we need to address. That's what I wanted to add. Thank you.
Thank you, Bivan. All yours. To the audience, at the end of this, we're going to take 4 questions. Fastest finger first. So please write down your questions and get ready to clarify all your doubts from these wonderful panelists that are there before you. Thank you.
Thank you. Kiran, swiftly over to you. No pun intended. I think we're switching gears now to the cross-border infrastructure side. We've spoken of the domestic infrastructure, and just situating your role first and foremost is important in understanding how value flows, what are the institutions involved, what is SWIFT's particular role. Baluji has pointed out that technology is not the constraint anymore. I'm sure you'll agree with that in terms of both the speed and transparency of transactions. So over to you just to explain that a little bit, and then we'll perhaps do a jugalbandi between you and Mr. Lavasa.
Thank you, Vivan. A very warm good afternoon to all of you. It's a privilege to be with such distinguished and accomplished speakers on this panel. So as far as SWIFT is concerned, you have to look at us like an airport. We are created like an airport, which means that any product can land data into any point in that country and take away data from that and deliver anywhere else. So today, if you look at an airline in India, say Air India, if it's going to a remote area in Africa, it will not go directly. You land somewhere and then connect to that point. Right? Payments also follow that geography because of the fact that it's very difficult for a bank to replicate a direct infrastructure in a country. Right? So what we have done is that we had a proprietary language called MT. We moved away from that proprietary language to come to open standards, which is ISO 20022, such that all the parties that are exchanging information at our airport are able to see and read the information in similar form. And the other thing that we do is that the information between all the parties is available real time. So like Balu or Monica were pointing out earlier, technology is not the challenge. The challenge really comes at the border. When you look at India, I'm a great UPI fan and I'm really proud of what you guys have built. You know, I think Balu alluded on this. The governance, the control is in one geography. But when payment moves to another geography, another layer of governance and control comes into play. And the challenge for the world is to remove that friction to make the payment move faster. And I think I also agree with you, Balu, in the fact that probably exporting our knowledge, know-how of how to manage these pieces will actually make the cross-border experience more real-time. And I'll tell you there's a reason why we have to focus on this. If you look at our economy, from 1947 to now, we have come to a $4.2 trillion economy. Next 7 years, our economy is going to be a $7.5 trillion economy. Just in 7 years, what we achieved in 75 years. And do you know? 25%, about 1 trillion of that is remittances. And if that remittance, when it comes to India, stays in it doesn't get credited to any one of you for usage and takes 2 to 3 days to get credited, it creates an economic problem. So the agenda should be on how do we accelerate the credit of that remittance faster into the bank account such that the economic growth of 7 trillion can become much faster. And I think for those reasons, it's very important for us not to look at technology, but to look at solving for these problems that exist as trust between two geographies and aligning them. I think that's the bigger picture. In our role as SWIFT, we are only transporting data. We are not a payment transfer company. But we are now trying to get beyond that and start working between two geographies to say, can we reduce the friction between the policies of these two countries to move them faster? And I'm very proud to kind of tell you guys that very recently, we started at SWIFT to work on that initiative. And I think someone referred to the Westpac transaction, Monica, you did. We streamlined purpose codes that are used in India for a payment coming from Australia, and the payment got delivered, which would have taken more than a day, in 37 seconds. I think that's very important for all of you to note, that if we solve for these frictions like Balu was alluding, I think it will make a big impact. I'll make one more point, and I'm stretching this, Vivan, is that we are like NPCI, we are a cooperative which is owned by the banks, right? And historically, our governance had participation from the usage of currency on our platform. And the largest currency that was used globally today is dollars. So dollar had some seat there, euros, pound, Japanese yen, yuan, all of them had seat. And they were representing the voice of this infrastructure. We said that we need to change the voice and get Global South as part of this infrastructure and reduce the board from 25 to 15, only 8 representing currencies, other 7 representing voices from Global South and independent experts. I don't know how many of you would have picked up yesterday, there was a headline in Economic Times. India has a seat on the SWIFT board today. And now we can also have this powerful sharing of knowledge on that platform. That will change the game. But the bigger picture for us at SWIFT, while being a rail for India, is how can we accelerate that 1 trillion to be used faster such that the 4.2 trillion can become a reality to 7 trillion faster than what it is today. So I'll just stop
Thanks.
here.
I think Balu had a quick interjection and then...
I wanted to say I met his previous SWIFT CEO way back in 2012. He just implemented IMPS, so we are having a chai discussions. So that time I told him in India money moves swiftly even without SWIFT. He didn't like it. But I'm happy that now we are taking steps to make sure that money moves swiftly even with SWIFT. I'm very happy about it. And as he rightly said, I think SWIFT is also moving away from just the bankers running it. I think it's proud for all of us to know that NPCI CEOs are now on the SWIFT board, which is an amazing thing, right? So many of the learnings which happens in India will get transported to SWIFT, and through that, I think you talked about UPI export, but the concept is getting exported. So that's a great news for all of us. Thank you.
I think, Mr. Lavasa, this is a good segue for you because I think we've narrowed our aperture to talk about payments infrastructure in this panel, obviously deliberately because it's got a UPI moniker. But it's not only in the context of payments infrastructure when we think about internationalization of public goods or even private goods that we may want to travel, travel across the world, where India seems to not necessarily take a whole of government approach, A, and B, build the requisite technical capacities to represent itself better in standards forums. For instance, we've seen this in the case of telecom that you were also alluding to outside. So can you talk us through what a change in that mindset would look like for you over the next 5 or 10 years? How do we get there? How do we think through the governance part of this discussion, without which really, technology will keep moving fast. But the institutions will take time to catch up.
So, thank you very much and good afternoon, everyone. Before I come to your question, and in fact what I'm going to say is related to your question. My friend Sanjeev Ahluwalia referred to me as an elephant. Now, elephants are known for two things. Patience, I've waited patiently. And the other is memory. They have a very good memory. So while hearing all that is being said, I recalled several milestones with which I was associated. So way back when I was Joint Secretary in the Department of Economic Affairs, one of the first responsibilities that was given to me by my secretary was that, look, FERA is gone, FEMA has been legislated, but we have not been able to operationalize it because there are no rules. So can you please make this your priority, that we must have all the rules under FEMA notified so that FEMA comes into action. And I think for about 3 months, we used to lock ourselves in a room, representatives of RBI, Department of Revenue, banking division sometimes, etc. And we made sure that, so you'll find that all the original rules were notified somewhere in the middle of 2000. Now, the second thing which I recall is that one of the last things with which I was associated in the DA was a visit to the FATF in Paris. And the proposal for India to become a member was initiated after that visit in 2002, somewhere towards the end. Now, cut to 2016, immediately following demonetization, the necessity of digitizing the economy was felt. Not that it was absent earlier, but there was a need to accelerate that. And then that is the time when I think the entire acceleration process, as far as UPI and NPCI played a stellar role in that. In fact, I visited NPCI that time. So I didn't know when I was doing all this that so many years later, I'll be in a room to answer all these questions. But from whatever I have heard, what I feel is that there are 4 things which are inescapable. One is that we will need an integrated infrastructure if we have to look at globalizing this entire financial transaction. The second is that we have to harmonize the procedures and standards. There is no escaping that. You may have an odd bilateral success somewhere, but that is not going to get us too far. And the third is some kind of congruity in laws. And when I say congruity, it doesn't mean that all laws should mirror each other, but then there has to be a certain congruence of spirit in the laws of different countries. That is when you can work together. And fourth is, I think, a very unambiguous jurisdiction. Because when you move money or product from one geography to another, there is always a question of jurisdiction. So I think these four things are the key pillars for achieving success. Now, even while you do that, I think there are some core concerns which you could say are the concerns of the government or the sovereign that have to be kept in view. We were talking about that. And you will find that, for example, regulators and governments will always be obsessed with money laundering. Are they creating an environment in which this is becoming easier or difficult to track? So whatever solutions you find, you have to keep that psyche in view. Or for example, the CTF or CFT, the financing of terrorist activities. So that is also one of the major concerns, because of which so many countries have got together in the FATF. And then you talk of grey list and this list and that list. The third thing is that your grievance redressal mechanism, I think that has to be in place, and that is where I talked about jurisdiction being very clear. Now, having said all this, it is not that there are no models that are available. Models are available. But consider for a moment the example of, let's say, a highway. And we are all used to highways in India. There was a time when there were no tolls, then the toll barriers came in. So they became a nuisance, but that nuisance people could tolerate because of the quality of the infrastructure. But then you had a situation where the barriers are now being removed and you are moving into automatic deduction and you can just drive past. Not that it's free, but the system is taking care of the deducting of the toll and you are allowed an efficient passage. But if somebody were to think that I will create a system by which, let's say, a guy carrying contraband goods will not be allowed to pass through this, is that possible? Can the system do that? So I think these are the difficult challenges. As you're talking about transaction in 37 seconds from Westpac to India, the prohibited items or areas of that transaction, can the system give enough window or provide enough safeguards to take care of that? I think any solution that you find will have to keep those concerns in mind.
Thank you, Lavasa ji. I think in part you've already given the answer in our private conversation outside, which is that it is also down to the risk appetite that institutions have, the governance architecture has, in terms of this sort of 80-20 paradigm where you don't want to slow down 80% of your business for 20% of the actors and so on. But Kiran, just to this point and building on it, there have also been, it's not, everything is not despondent and everything is not 37 seconds. Something in the middle is where we find ourselves today, which is that the RBI is listening to operators such as yourselves to at least speed up the inward remittances, which is, of course, the lower risk part of talking about cross-border payments. So can you talk to what you've managed to put in place now together as a community to speed up payments tangibly through regulations that are to kick in force later this year, and also to respond to what Mr. Lavasa said about the concerns of the sovereign which do sometimes compete with and are sometimes even antithetical to the internationalization of standards and so on and so forth?
Yeah. So thanks, Vivan. So as far as the regulator in India is concerned, I think with the UPI success, there is definitely a keen interest to see how we can accelerate the cross-border remittances. There are two buckets under which the problem sits. One is a bucket of operations, and I'll give you examples there. The other is the bucket of capital controls. So let me give you one example of an operational issue. So in our banking world, when you get a transaction, you have serially one by one these messages being received by a bank. And banks in India wait till end of the day to look at the final statement and then intimating the clients, saying, we've received your money, now how we would want to credit it, can you please define the purpose, and can you please tell us what rate you would want to agree on this one, right? When we made the representation to the regulator that when you look at developed world, they do not wait for the statement serially. At the end of day, they look at it serially. It's like a SMS that's matched real time, and an intimation is provided to the client to say that money's come, you want to credit it now, we can do it. So that's the area of operational process that RBI has now given timeline till October this year for banks to change. The other representation we made to the regulator was that if I'm receiving a remittance, I'm an exporter, I already know that I've sent my goods. In India, you have this great concept of positive pay, which is that if I pay any check above 500,000 rupees, I need to put it in my banking system, and if it is not there, the check will get bounced. Can we use this best practice, like Balu was saying, shifting best practices to cross-border, and say we have a positive pay concept where I as an exporter know I am getting a payment. If I already insert it, the minute the remittance hits it, the money will instantly get credited because I have all the information as a bank to process it. So these are some of the operational nuances that RBI has already issued a guideline and instructed banks to comply by October of this year. There are certain capital control policies and procedures like foreign inward remittance certificate that needs to be issued. We have such good digital public infrastructure. Can we create a public utility where these are all automated, right? So these are some of the recommendations that we'll now be making to the government, and hopefully that will get solved. It's a journey, but I'm very confident that India will, like in domestic, in cross-border, define cross-border experience. And this is our moment, because cross-border has a lot of challenges because two countries are talking to each other, or three countries in many cases. And if India can solve for that, we can proudly say we solved in India with UPI, we solved for cross-border with multi-party partnerships. And that's a very exciting phase. As far as Sir spoke about responsibility in terms of letting, and it's a great example, Sir, you used when a car passes through toll, and we are like a road, right? How can we make sure that the actor sitting in that car is legit? And I think that's a great AI challenge. With the technology evolving, there could be possibilities to look at that differently. We will definitely start working on it and try to evolve that mechanism as well. And that's a journey. So that's what I'd say.
Thank you. Mr. Lavasa, just perhaps the last question to you, and we open it up for the audience. You know, this whole business of internationalization, it also cannot be bereft of the part of the conversation that relates to internationalization of the currency itself. I mean, the dollar is a shining example of that. We consume all of America's soft power, also in part because we consume the dollar so seamlessly and at scale. How do we think in a more enlightened sense about the internationalization of the rupee as a project, given all these technological developments that we've had to contend with on the panel?
So, you know, when I was entering this hotel, I was wondering if there was no boundary wall, no gate, no security check, no metal detector, will more people come to this hotel if you didn't have all these barriers? Or if this hotel were to introduce a very exciting menu or a recreation program, will that attract more people? And they will not mind withstanding all these barriers which are created. So I think fundamentally, the internationalization of the rupee that we are talking about will come from the depth and the vibrance in the Indian economy. So who in the world requires rupee? That is a central question. I think it's a very elementary question. And that will determine the velocity or the value that rupee will acquire, which will require internationalization. It is not that if you create an infrastructure, I think if you read the RBI vision document, they are talking of three things. They are talking of trade, they are talking of digital integration, and they are talking of expansion of the financial markets. These are the three things that they talk about when they talk of internationalizing the rupee. And I think all the three things are quite valid. So we'll have to look at, and of course, I don't mean to undermine the need for introducing greater efficiency in existing systems. I mean, those efficiencies can be brought about, and there are three levels at which this can be handled. One is at the level of the regulator, whether we need some change in the regulations. We are not talking of technology for the time being. I think technology and infrastructure, that will happen, or that has already happened. But whether you need change in regulations, because if you look at the FEMA, the spirit of FEMA, and by the way, whenever you talk of any infrastructure which is smoothening the flow, you have to look at two-way flow. You can't look at one-way flow. I mean, I remember an absurd proposal which came when the first model concession agreement for toll roads was prepared. And people will find it absurd. In that model concession agreement, the proposal was that if you came from one side, you'll pay one kind of toll. If you came from the other side, you'll pay a different kind of toll. So anyway, so all these remittances, we want to ease remittances, the flow of remittances, we want to utilize that money in India. Of course, it's a very laudable, desirable thing to do. The faster it lands on in our economy, the better it is. Who can dispute that? But then we have to be prepared for a reciprocal arrangement. And what will that reciprocity entail is something which we need to be conscious of.
Thank you, sir. Sanjeev ji, would you like to take the questions from the floor?
As they say in Mumbai, it's time to say khalas and end the session. But we'll do it with 2-3 questions. Now, those who asked last time will have the least priority. I'm sorry. I see some hands at the back. Yes, one, madam, you. And second question at the back, blue shirt. And 3, madam, at the back, 4, special allowance for an economist.
And just to add, please do.
So 4, 3, 2, 1.
Please make it a question.
Please go ahead and ask your question.
We're running out of time, so please make it a question and not a comment.
Short questions,
also,
please.
please direct your question to whoever you'd like to answer.
Sure. Hi, I'm Meghna from Ikigai Law. I'll try to wrap this question as quickly as I can. This could be answered by Dr. Balu or Jasuja, ma'am. Ma'am, you hit the nail on the head very quickly by going on to the infrastructure point of view, right, where you said that there's zero MDR, payment service providers that are in a race to zero. NBFC credit on UPI is something that's not been allowed, right? How do we expect fintech companies to make money? How are we expecting the industry to absorb the cost to no end? The government is very gung-ho on the fact that UPI is a free service, but aren't the subsidies also coming from taxpayer money at the end of the day? Either way we look at it, what is the monetization scheme that the government has for long-term sustenance of this infrastructure that costs probably 10,000 crores a year to sustain?
Thank you. That's a very good question. No, I'll answer it before we go to the next one, sir. Or you want to do? Yeah. So, let's get the questions on the table. I'll forget. Please remember the question because otherwise
Yes, I have a basic question to Kiran, that we are finding that as far as there's a perception, there's a perception that SWIFT is basically very, very, bureaucratic, and with Chinese KIPs and a lot of other fintechs are coming up, they are basically going to solve this solution of hedging cost, volatility, risk of forex, and also a lot of, what you call, there's a lot of, hassle as far as these transactions are concerned, which take a lot of time, So how do you deal with that type of situation? Because the AI is also going to change that, because SWIFT is considered to be a lot more, basically it charges quite a lot on transaction fees also, and it is considered to be a lot more bureaucratic also. So how do you deal with that kind of, perception and challenge as far as its, long-term, future is concerned?
Thank you. Anybody got that question as a
Yeah, it's a whole bunch of existential questions for Kiran. Any third question?
Kiran has picked up that question.
Okay, there's a last question here, and then we can wrap up.
There's a lady at the back who wanted to ask.
So, I have a question for Mr. Lavasa or perhaps Dr. Balu. As we go forward, I'm talking about the peer-to-peer platform. Nobody spoke about the peer-to-peer platforms. So we have Razor, we have Payoneer, we have PayPal, we have Stripe. And as we go forward, the MDR is expected to come down drastically, and they're expected to become real-time. It's not 3 days, perhaps 1 day, half a day. Murphy's Law. Performance obviously will increase. So what sort of AML challenges do you see, and what sort of mitigants do you foresee? Dr. Balu or Mr. Lavasa?
Okay, I think we...
Deepak Maheshwari here, and my question is also to Dr. Balu. Last year at Dubai, the Postal Union did an agreement with the India Post using 156,000 post offices for inward remittance. So what type of impact has happened or is likely to happen on that front? Thank you.
I don't know. A lot of questions are thrown at me. I'll try to answer that as best as I could. I am not an expert on everything. Like somebody said, we can do anything, but not everything. So I can't do everything for sure, right? So your question of, so you must understand, why this UPI rail was created, right? So on everything, we cannot look at profit alone as a motive, right? Capitalism has two components. One is a normal capitalism, which all of us are aware of, but there is also something called compassionate capitalism, which Murthy sir always talk about, right? You should look at societal good as a primary purpose rather than, just shareholders' interest being taken care. Your consumers comes to the society, your employees comes to the society, right? So societal good is taken as a primary objective in the case of UPI, right? The government has come out with papers. I think there are enough empirical evidences. The UPI has actually formalized, the economy in a big way. Your tax compliance has significantly gone up. Right, the availability of credit to MSMEs have gone up because people have started using this data to underwrite and give loans, right? So therefore, zero MDR, I think from my limited understanding, government is reimbursing the banks the cost of the transactions, right? So who is losing out in this is fintech. But the point I am trying to say is, it is not that, it was not told to you upfront that there is no revenue in UPI. You all knew that there is no revenue in UPI. It is your job as a smart person to figure out what are the adjacent revenues I can make, right? That was made by many companies, right? The speaker phone was an innovation on top of UPI, which I believe is a significant reason why UPI succeeded, right? There is a revenue opportunities on that, right? There is revenue opportunities on, giving lending, right? So it is up to you to figure out what are the opportunities available given this, right? It is not that, the people didn't tell you upfront there is no MDR in UPI. It's already been told. So if you are into fintech, you want to make money in UPI, it's for you to figure out what is the right way of doing it. Right? What are the ways you can figure out, like, the speakerphone kind of an idea. So,
also,
I think
just to add, this cross-subsidization of UPI is not God-ordained. It is decided in every subsequent budget, and it's a matter that's discussed and debated, and the merits are sort of...
So the government view is that, because of formalization, the amount of tax collection has significantly improved. For tax collection, every rupee they spend certain amount of paise, right? Because of the UPI, the compliance has improved, tax collection has improved, and therefore the government is happy to pay the banks the cost of the transaction. That's what he is alluding to. So that's why I look at it. What is the concept of UPI? I think everything is so transparent in the country. The messaging standards, what kind of transaction fees are available. All of this. It's up to you to make. If it's not an opportunity, why would Google spend so much of money, right, giving cashbacks to get 40% of the market share? Why did PhonePe do that?
Can I disagree with you?
Please, by all means, this is a common
When there is a
forum.
public utility that we take right now, we have public grievances and people shout, people scream when the public utility does not work. If UPI is a public utility, then it will have problems if it is subsidized at zero MDR. And that's the fact. We cannot expect a high-performing system at 99.99999 digits of resilience to be acted on and to be provided for by taxpayer money. There has to be the market forces that have to come in, feeling which, when the national infrastructure fails, then we should not hold the public or the government accountable for it. Because the fact of the matter is that when payments stop moving, the economy stops. And I don't think that there can be a contradiction bigger than this, which is on one side we say that, UPI should be free because it is public good, and the other side we say, it cannot fail. Both things cannot coexist.
So I'm not saying UPI should be free. All I'm saying, I'm answering her question in terms of fintech, what they need to do. I'm not for a minute saying there should not be any revenue on UPI. I'm not saying that. I think in the current construct, this is what UPI is. How do fintech make revenue? That's the question I was trying to answer, right? I always believe, any economic activity has a result in some kind of a profit. Otherwise, there will not be enough money to reinvest on that. NPCI itself, if you don't know, please be aware. On every transaction, while it is free for the consumers and merchants, NPCI collects their fee. Right? Otherwise, NPCI will not succeed. NPCI will not have sufficient revenue to reinvest on new products and services. So I'm not for a minute saying it should be zero MDR. I'm not saying that at all. I'm not advocating that at all. All I am saying is from the perspective of fintech, how do you make money? That's what you need to think, given that there will be zero MDR for some more time. Right? So I'm fully fine that, you have some MDR which is reasonable. I think RBI did come out with, for asset-light accepted infrastructure, they did come out with a much lower MDR. Right? That was prior to UPI. I think India RuPay debit cards were growing. So therefore, they did come out with that kind of a construct where, if it's asset-light infrastructure, which is a QR code, right, the MDR would be substantially lower. I think something like that has to be constructed. Even RBI agrees that, there has to be some kind of an MDR. So I'm fully aligned with you on that perspective. Right? The next question was from your side. Right.
Yeah, so
I don't have the time for this, but I will explain to you one-to-one, definitely. Yeah, thank you.
Yeah, so the next question was on SWIFT. SWIFT is expensive. So first of all, we are a not-for-profit, a cooperative company. If you look at our transaction charge, it is, in Indian rupees, would be under 10-12 rupees per transaction. That's all. I want to repeat that, that's all, right? In terms of speed, our transactions are near real time, which means that a courier will be picked up from your point to the point of destination bank and delivered in less than an hour. What I was highlighting earlier is the capital controls and other processes that kick in after that in cross-border, because there are two jurisdictions that are involved. That leads to delays, which is something that is not Swift's thing. It's actually the banking and regulatory framework that comes into play in that jurisdiction. The third thing about bureaucracy, given that we are a cooperative and we have 11,500 customers, banking and financial services, we only go behind responsible innovation, which means that we will not get our community to invest behind something that's not scalable. So we would want to do incremental investments on the network to get value, rather than saying we'll do a blockchain and we'll do this and we'll do that. So there are two big innovations that we are driving. One is improving speed that I spoke about, aligning policies between two countries, like, for example, UPI's best practices with another country and so on and so forth. The other is using the current landscape of evolution of money. Money was paper. Money became, now money is becoming CBDC, money is becoming stablecoin. Right? We are saying that we will be able to interoperate if in US is on stablecoin and India is on fiat currency. Today, we built a capability that these two countries can exchange information with our platform. No additional investment, built in, right? So if you look at us, we only innovate responsibly. We don't innovate just because we want to make a press release. That's not who we are. So I just wanted to bring those 3 points
Kiran,
too.
also, I think if you can touch on what the spread is for you per transaction, that would be useful because he talked about...
I did. So I said it's under 10, 12 rupees per transaction. That's all that SWIFT charges. And anything that's charged to you on SWIFT is not SWIFT charge. And I'll give you an example. My daughter studies in the US. I made a transaction with a bank. I'll not name the bank. And they gave me a slip saying this is SWIFT charge. And it was some 2,500 rupees. And I just told you what my charge is, right? And I was debating with them, this is not SWIFT charge. No, this is SWIFT charge. Right? So, unfortunately, they are my owners as well.
So they are swifter than you. Yeah?
They make money, we are not for profit.
No, but I heard somebody talk about subsidy, government subsidizing. So we must recognize the fact that today, if everyone is taking pride in the fact that every second digital transaction happening in the world happens in India, and we have so many transactions per day, whatever. And in fact, if you look at the statistics, in the last 5 years, I think the number of transactions have gone up 6-fold or something. The volume of transaction has gone up 4 or 4.5 times. That only means that more and more people with smaller money are using this platform. So the fact that so many people have been able to come into this fold, I think it owes a lot to the way the government controlled the merchant discounting rate and the subsidies it provided. If I remember right, cumulatively, I think the subsidy given is about 8,000 crores.
2,600 crores.
Sorry?
2,600 last year.
Yeah, so, but the benefit that it has had in various forms, and this is not the time to recount all that, I think it's much more than the subsidy given by the government, but you have to look at it from the perspective of the benefit to the overall economy, the benefit to the user, and of course, whether the people who want to make money in this transaction, whether they have enough opportunities. I'm sure they have survived this far, they have thrived this far, and they will continue to thrive. It's only a matter of time.
Yeah, I just wanted to add one point before I close, right? Just to give you how much we have grown, like Ashok sir said. In 2009, when I was about to join NPCI, we did not have 800 million total retail digital payments across all products, debit card, credit cards, NEFT and all that. In 2026, I think we are 250 billion transactions. That's the kind of growth we have seen in 15 years. Right? All these policies have helped to get us there. So that's important to understand. No country has seen this kind of growth in 15 years' time. And I also wanted to say this didn't happen overnight. It happened because of the various reasons. I would say RBI acted as a catalyst. They have been issuing vision statement from 2000, I think 2005, 2006 onwards. Right? That then NPCI as an organization happened. Right? They created a trust. Right? They created so many products and services. By the time 2016 UPI came, NPCI as an institution was well trusted by all the banks. Right? So what you need to understand is this transformation, and I call it complex adaptive systems, because transforming an organization is very easy because, CEO owns it, everybody is responsible, you can do it. But transforming society at this scale is not easy. These are complex adaptive systems, right? Because one man's benefit is other man's problem. Like you discuss MDR, right? Somebody wants MDR, but somebody doesn't want MDR. So how do you balance this interest, right? So in a complex adaptive system, there is no final solution. There is no, you keep on resolving, some other problem will come, resolve that, some other problem will come, keep on resolving that. But I wanted to say this has happened over a period of 25 years. India's digital transformation of digital payments has happened over a period of 25 years. The seeds were laid in 2000. right? That's a book I wrote, and the book is available here, right? It's like, I mean, I know how many of you play cricket, I don't know. Rahul Dravid gives a beautiful example of bamboo, right? For the few years, you don't see anything growing, right? But it is actually creating the infrastructure to make sure that it can grow 30 feet or 40 feet, right? That's exactly the story of NPCI is all about, right? That's what it is, It does not happen overnight. So that's the answer I also have for some of the questions asked. Can I replicate this in other countries? Possible, but then they should be patient. It will take 10 years, 15 years, 20 years. So that has to be understood very well as well, right? And many of the questions which came up, I think my book answers that question. Your question is MDR, it's answered in the book. So when you get time, please do buy the book, right? And you will learn, and you will also contribute to the education of children. The proceeds of the book I am donating to, educating children. So you become part of that as well. So please do that. Thank you.
So this has been a fascinating discussion. Let's have a round of applause for these wonderful participants, Vivan, and our staff over here who's been helping us all through. By the way, we have a delicious lunch waiting for you. So I would suggest that...
Sir,
I think not now. Let's
Not
cut
now,
it now.
yeah.
We don't have time. Huh?
Careful. Help me to get down before we... Yes. Careful. So,